Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about all the stocks in news, including Adani Group stocks, and we'll be talking about the trade setup, and we'll also be having your queries, stock-related queries, addressed by our experts on the show. But before we do all that, let's take a look at the top headlines at this hour. Wall Street rallies on Thursday after Atlanta Fed president says he favors slow and steady policy action, backing a quarter-point rate hike. Almost all Asian markets trade higher after strong Chinese data. The SGX Nifty also suggests a gap-up 100-point up start for the Indian markets. Relief for Adani Group. Promoter trims holdings in 4 entities. US-based marquee investor GQG Partners pumps in more than 15,000 crore rupees to pick up minority stakes in Adani Enterprises, Adani Ports, Adani Transmission and Adani Green. And how should you navigate the sell-off on Dalal Street? Well, we'll get you a view from Ajay Bagga, and stocks in focus today are M&M Financial and Natco Pharma. Well, without any delay, let's get on board our guest for today. Ajay Bagga joins in this morning. Ajay, so good to have you on the show. First of all, I want to ask you, there has been a steady weakness on the street. We saw an 8-day sell-off come in. We saw a day-long bounce. But after that, once again, the markets succumb to selling pressure. How should one go about navigating this volatility that we are witnessing on the Dalal Street?
Yeah, I would advise caution. Indian markets have underperformed. If you look at the first 2 months' performance, outperformance has come in Europe and Japan, which are in a catch-up trade. China, which saw a catch-up trade starting in October end, has actually gone down 16% from its highs, and largely it's Chinese tech companies which went down quite sharply. So money seems to be getting out of China, getting into Europe and Japan, which were undervalued, which were underperforming. And India has seen outflows of FI money, and based on which we have been underperforming this year. The larger indices are down 3 to 4%. The broader mid-cap, small caps are down 4 to 5% on an index basis. But there are sharp cuts in certain segments and certain sectors. So I would advise caution. Yesterday's Bostic's comment led to a minor relief, but today again US futures are trending downwards. So the interest rate hike is not done. We are expecting at least 3 more hikes from the Fed, at least 2 more hikes from the RBI, which will be negative equities. So probably one more downturn, Anandita, before we can call a market bottom in the US. India will outperform, but probably in the second half of this year, we will have to go with the global markets at least. Well, not till the Fed is raising rates.
Right. So some bit of outperformance may come in the second half of the year. Mr. Bagga, I also want to get in your thoughts on the Adani group of stocks. We have a positive news flow surrounding the group now that US-based GQG Partners has picked up minority stakes in 4 of the Adani group companies, and for somewhere around 15,000 crore rupees or thereabouts. Given the fact that the Supreme Court has also set up like a special panel with eminent names like Nandan Nilekani and KV Kamath to look into this matter. Would you say the worst of the sell-off is behind when it comes to Adani stocks, and how should one go about playing this group of stocks now?
Very difficult to say. And again, I'm not SEBI certified, so I would not be able to comment on particular stocks. But I would say, you are going to see some kind of an economic slowdown, not a downturn. India will see a slowdown. And in that kind of a scenario, stick to quality, stick to actual cash flows. Don't look at EBITDAs and adjusted EBITDAs. Look for actual cash flow generating companies. You have a lot of opportunities in staples, in FMCG kind of companies, even IT on a contrarian bet. I would say we have seen a lot of selling in IT, and it is under-owned. Might be a good time to get into IT, cement, industrials, capex beneficiaries in India, all companies which are cash flow positive and which have a quality long-term horizon. I think those should be looked at. Particular stocks and particular groups I would not like to comment on.
Right. Since you mentioned capex, I also want to get in your thoughts on some of these railway stocks. They saw a very strong rally in yesterday's session, and there was a budget boost because the government has announced record capex for rail. And aside of that, consortiums led by RVNL and Titagarh, they have emerged as among the lowest bidders for the government's Vande Bharat train set project, right? So how would you view this entire railway basket? Do you think it merits to get into these stocks now?
I think most of the rally is done, Nandita. A lot of it is already done. And mostly what happens is these stocks run up leading up to the budget. And the budget was quite positive, and it's a multi-year railway capex that's going on. Most of the tracks are electrified now. We are seeing more than 400 Vande Bharat trains being launched, and all the concomitant orders will flow through. But look at the valuations and look at the actual cash flows, actual orders. We had one MNC which was bid up a lot over the last 1 month on the back of maybe huge locomotive orders, and that did not come through, and we saw a sharp correction. So I would say most of the journey has been done. Cement is just starting off. Other industrials are just starting off. Maybe look at those. So have a combination of the valuation and the actual cash flow potential, and look at positive margin companies. That would be the mantra in these trying times.
Right. Speaking also about the auto pack, we saw auto sales numbers come in for the month of February. Maruti has in fact warned that El Nino impact could weigh out on rural demand. And two-wheelers, when it comes to that space, Bajaj Auto has flagged off concerns with respect to exports, especially in the Nigerian markets, right? So how would you view this entire four-wheeler and two-wheeler pack now?
Yeah, it's looking difficult. The exporters are suffering. As you mentioned, Nigeria has had a very big election-related issue, a demonetization issue, currency depreciation. So all exporters into Western Africa are really facing these issues. Ghana is also having a currency issue. So we have to be very choosy. Auto remains a long-term buy, very well-run companies. Good cash flows, and they will pivot into the hybrid and EV models down the line. So good opportunities for value unlocking will come. But this year, I think rural demand and what you mentioned, El Nino, the issue because of El Nino, if the monsoon is underballed, then we could have rural demand coming back, getting postponed. The government will make sure that nobody starves. The Garib Kalyan Yojanas will see more funding coming in. Food subsidies will go up. But the entire demand metric of the economy could suffer. It's already slow, as the recent Q3 GDP numbers showed. And 58% of our GDP is private consumption expenditure. So straight away, two-wheelers and tractors get hit on a poor monsoon, and the lower end of cars and lower end of the SUVs will get hit. So wait and watch. It's a good sector. Again, there are certain companies you can look at which have, weathered the storm of the last 2 years better. But I think you could get better prices in the second half of this year. That might be the entry point into auto.
Right, we're running out of time, but I want to get in one last question to you, Mr. Bagga. What are your thoughts on PSU banking space? Last year there was steady outperformance, and this year the Nifty Bank Index is down somewhere around 14% on a YTD basis. The PSU Bank Index. This pack has been trying to make a comeback. Last 2 days, they have gained quite a bit in weakish market setup as well. How would you view stocks like SBI, Bank of Baroda now?
The top end PSU bank will outperform. They will hold their own, and you will get good value. It's coming off 10 to 12 years of underperformance. But again, for the retail investor who are our audience, when you have such well-run private sector bank alternatives, I think stick with those. These are going to be little trying times. We have seen the best of the banking recovery, and we should continue for the next 2 quarters to see good numbers. But a flattish credit growth could hit us soon as the consumer wallets get challenged if there is a poor monsoon. So I would say stick with the top-end private sector banks. PSU banks, we've seen a good rally. We could see a stalling for a couple of quarters.
Right, so stick to top and private sector names. With that, thanks a lot for taking out time this morning, Ajay Bagga, and joining us. We look forward to having you again on the show sometime.
Thank you.
Well, with that, let's also bring on board Mr. C.A. Rudramurthy, who will be taking stock of all the queries that are pouring in this morning, and of course the technical setup for the markets as well. Good morning, Mr. Rudramurthy. Good to have you on the show. SGX Nifty indicating a gap up start for the Indian markets. Do you think we are going to sustain any kind of gains if they come in today's session?
Yeah, very good morning, Nandita. Thanks for this wonderful opportunity. See, for me, markets have definitely made a bottom. The support at around 17,300 to 350 range on Nifty future will hold on. And I'm not now bullish on market, but I am super bullish on market. And one has to clearly understand even the reasons or the why. If you observe, our markets have hugely underperformed both Western market as well as European market and even Asian market. Having outperformed in the year 2022, this underperformance has been majorly because of Adani saga. And now Adani saga is completely getting settled. Because of shortage of time, let me make a simple and a bold statement that Adani cannot be compared with Anil Ambani or Vijay Mallya. He is Gautam Adani, and I expect big up move to come still from current levels in Adani group of stock. But one has to understand now Adani group of stocks starting to outperform will only take our markets back to those all-time high, and you will see that huge outperformance in market from now on. And I also feel Adani group of stocks, their businesses are very strong, but the major concern was valuation. People cannot buy just because companies have quality businesses at any price. So people who just misunderstood or who did not understand valuation bought good companies at any price. Now that overvaluation has got corrected and Adani group of stocks are now available at fair price. In fact, for me, two stocks from the entire Adani group, if I have to pick, it will be definitely Ambuja as well as Adani Port. Even at current levels looks very good for me. And now for me, keep aside the Adani saga. The whole market will start outperforming because of Adani now getting back to that revival and rising 15,000 plus crore. Marquee investors coming into the buying yesterday is not a simple thing. They are not intraday traders to buy yesterday and book profits today. These people would have read all the reports of, whether you call the report of Heidenberg, you call any other reports, what I and you are reading, they would have read everything available in market. And then only with that kind of experience and expertise what they would have put their long-term money. So for me, our markets will hugely outperform. In fact, PSU banks will be the top performers
right,
for
Mr.
me.
Rudramurthy.
Do not look at today's news and today's market. Market is always a future-looking animal, and
right.
a lot of news coming.
Right. Before we move on to queries, I also want to get in your thoughts on Indigo. Now, this is a Moneycontrol exclusive. Indigo is targeting to enter the US market with code share agreement with Turkish Airlines. Now, if you look at the stock, it is down somewhere around 12% on a 1 month basis. Would you advise investors to take positions in this stock now, Indigo?
Yeah, Nandita, 1,700 to 1,725 is a very strong support zone on Indigo. Good stock to own. And post this COVID and all, people are making that travel. And I am sure Indigo is a fabulous stock to own. I am a buyer in this stock on every dips. Keep a stop loss at around 1,700. Have it in your long-term portfolio. Stock is headed towards 2,200 and eventually it can even move to 2,500 plus level. A strong buy at current level.
So Indigo is a strong buy at current levels. You can of course catch this story of Indigo targeting the US market on our website moneycontrol.com. The next stock on my list is Natco Pharma. The company is going to consider a buyback on the 8th of March. Stock was up 2 to 3% in yesterday's session. Do you expect more upside to come in on this stock now?
Yeah, see, 555 on Natco Pharma is a crucial resistance. If the stock breaks 555 and closes above that, I see momentum coming in this stock, and that can take the stock to levels closer to 600 first and then to 635. So I will give a conditional buy above 555. Look at initial targets of around 600 and then 630 to come on Natco Pharma.
Right. The next stock on my list is Macrotech Developers. This stock was on a tear yesterday, up 20% or thereabouts. How is it looking vis-a-vis the other players in the realty pack now?
See, for me, this is a stock which has given that huge bounce yesterday, and you have seen it again breaking above those levels of around 900 and closing at the highs of the day with volumes. However, if you are a momentum player or a trader who wants a quick gain, then yes, I might recommend you to go into this stock. Look at targets of around 1100, 1120 to come. But if you are an investor who wants safer stock, I will still go to stocks like Kolte Patil, Shobha Developer, or even for that matter, DLF, Godrej Property. These are better stocks for you if you are a low risk appetite investor. Or if you want a momentum play, then look at Lodha for a target of 1100 to come.
Right. Let's also shift focus to viewer queries that are coming in. The first one is coming in from Suryakanta Mohapatra, and he has a query on the metals basket. Given the strength in Chinese economic data, we saw a strong rally come in Wednesday's trade. The metal basket was up somewhere around 4% that day itself. Suryakant wants to know your thoughts on stocks like Tata Steel, Jindal Steel and Hindalco, given the strong recovery in China.
Yeah, Nandita, for me, China opening up is good for metals, but one has to understand it will take at least another 1 or 2 quarters for metals to bottom out and then give that move on the upside. So if you have that longer time frame, then only get into metals. For me, in the order, I will first pick Tata Steel and second Hindalco. Vedanta, because of lot of news flow and their foreign bonds getting lowly rated, so I will not go into Vedanta at any cost. If I have to pick from metal, if you have a longer time frame, number 1 Tata Steel and then number 2 will be Hindalco.
So number 1 Tata Steel and number 2 Hindalco. Hope that answers your query, Suryakant. The next query is coming in from Saurabh Gupta, and he wants to know your thoughts on Colgate Palmolive. Is it a good buy at current levels for the short term, is what his query is. What would you advise him to do?
Yeah, Nandita, if I see this stock move and also the medium to longer time frame chart, in fact, Colgate has corrected from those levels of 1600 to levels closer to 1450. And from there, it is now making a bottom formation and an up move. So yes, Colgate might face multiple resistances on every up move. But then if you want to buy it for investment, yes, it's a good stock to buy. Keep a stop loss of around 1400 and buy at even current level or any dips to 1450. Look at initial targets of 1530 and then further up move towards 1600 to come on Colgate. I will recommend a buy on Colgate at current levels.
So you can look at buying Colgate at current levels. The next query is coming in from Naveen, and he has a query on Tata Elxsi. Now this stock has shed somewhere around 5 to 6% over the last 5 sessions. Would you advise a buy on dips?
See, Tata Elxsi was the darling stock for the year 2022. It has given huge returns, but then from levels of 10,000, this stock has corrected over 40-50%, made a bottom somewhere closer to 5,800, 6,000 zone. And now it is just again making that new accumulation patterns to move up. So I would recommend Tata Elxsi a good buy. Keep a strict stop loss of around 5,800. Buy at current market price. Hold it for a target of around 7,800, 900 to come. But stop loss at 5,800 is a must.
Right. The next query is coming in from Vimit Panchal, and he wants to know your thoughts on Gujarat Gas. The stock was pretty flat in yesterday's session, but was trading with a positive bias, and over the last 5 days, it has gained somewhere around 1% or thereabouts. How would you view some of these gas stocks now, Mr. Rudramurthy?
Yeah, see, for me, Nandita, Gujarat Gas short term can move towards that levels of 530. And for me, if I have to pick an alternative for Gujarat Gas, definitely stocks like IGL can do very, very good. But most of these stocks have similar patterns to me. But I would just put IGL better than Gujarat Gas on the charts. And I would rather buy an IGL. IGL can head towards levels of 480, 500. Keep a strict stop loss on IGL at around 425 and you can buy. Even Gujarat Gas looks good. Not a stock which should be avoided or something, but just a preference, IGL being better than Gujarat Gas on charts.
Right, IGL is looking better vis-a-vis Gujarat Gas. The next query is coming in on LIC, and Aditya Gandhi has written in. He wants to know your thoughts on this stock. Now, this stock has staged a comeback in yesterday's session, somewhere around 599 now, very close to its 52-week lows. What would you advise investors to do with an LIC now?
See, LIC, a lot of people having subscribed from those IPO days to now have seen this down move. I feel value has definitely emerged at current market price. If you are a long-term investor who has the 2-3 kind of a time horizon, then you can look at buying LIC. Those who have already bought it before, if you are that long-term investor, you can average at current level. And if I am a trader, yes, again, keeping a stop loss of 580, I will look at buying LIC. It has to first go and test those levels of around 630, and above 630, if it can sustain, yes, stock can move towards levels of 660 also. So unless you are that long-term investor, do not look at LIC. There are better stocks for momentum. If you are a long-term investor, then consider buying LIC with a stop loss of 580.
Right, if you're a long-term investor, then you can look at LIC now. This wraps up our query segment for today, as we've completely run out of time. But Mr. Rudramurthy, before I let you go, leave us with some stock recommendation for viewers today.
Yeah, see, for me, PSU banks will give fabulous returns for people even from current level. All these stocks are available in F&O, so you can buy it in futures and carry your position. But I would advocate people not to buy call options just because they are looking positive, because you have to understand option trading better. Theta or time decay will kill you if you are an option buyer. But then keeping this aside, buy it in cash market or buy it in futures and follow the stop losses very strictly. For me, the first buy is Canara Bank. Canara Bank is headed towards 315. Last 2-3 days, huge outperformance is seen in Canara Bank, and I will say PSU banks will lead the market rally. Adani Group will also make a big comeback. Banks will have huge outperformance to come. Both private and public sector banks will outperform. So I just have the preference of PSU banks. Canara Bank can be bought for a target of 315 initially, and eventually I am sticking my neck out and telling you Canara Bank is headed towards 400 levels. If you can have that longer time frame, keep your positions in futures rollover, have a stop loss of 285 for this long call on Canara Bank. SBI also looks very attractive to me. SBI is making that accumulation patterns on chart at around 520 zone. So keep a stop loss of 520 for SBI. Look at initial targets of 570 and eventual target of 630 plus to come on SBI. And my third pick is Bank of Baroda. Again, this stock is headed towards 185 zone. Huge outperformance is seen in these stocks for last 2-3 days. In fact, I tweeted saying PSU banks will lead the market 3 days back. Now, even though we have seen that huge outperformance in PSU Bank, still it will continue. And I'm looking at targets of 185 to come on BOB with a stop loss of 160. And also a disclosure, I have long positions taken 3 days back in all these stocks. I've even added to my positions yesterday. Even my clients have position on them. And I feel not just PSU Bank, even private banks will outperform. And for me, in private banks, in the order of priority, HDFC Bank will give a huge outperformance, and that will be the stock of the year for 2023. Risk reward is very favorable. Keep a stop loss of around 1,575 and buy HDFC Bank and carry your position. In 6 months to 1 year time frame, I won't be surprised if you can see 30-40% kind of a return in a low risk stock like HDFC Bank. Even Axis Bank and Kotak Bank will outperform. So in private banks, my order is HDFC Bank, Kotak Bank and Axis Bank. And when it comes to public sector bank, my order is Canara Bank, SBI and Bank of Baroda.
Right. So bullish call coming in on the entire banking pack. With that, Mr. Rudramurthy, thanks a lot for taking out time and joining us this morning. We will look forward to having you more often on the show. Well, for our viewers, it's a wrap on this edition of Morning Trade. We have completely run out of time, but don't go anywhere because coming up next is Opening Bell.